And we're live. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical and there is no guarantee of future results. All indices are unmanaged, may not be invested into directly. Any economic forecasts set forth during the event do not develop or may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC. Investment advice offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial. Good morning.
Amanda, how are you?
I'm good. This is for pet use only, and all the dogs are in the basement. So that's me. I don't know what I did to deserve the background. No, I'm kidding. We've got blinds going in. Gimbal is just transforming every single day. It's so fun to see.
Yeah, it is. That's quite a background. I haven't seen that one in the ones that you can download for your Zoom background.
Amanda, shift over just a bit, and there's something in your background there. There you go. You don't see that at every financial professional's office, but folks, sometimes that's what it takes.
I was just praying a little bit. Kneeling this morning. No. But we are transforming. You guys have some fantastic audio today.
We had our technical advisor came in earlier today and hooked us up because we ran into a couple of clients at a local discount store yesterday, and they pointed out they couldn't hear me very well yesterday. And so our technical advisor, Caleb Tyner, rolled in here and hooked up our microphones today so that the sound might be a little better for all of you listening. Yeah,
the dad joke in me is the feedback we've been receiving was to get mics.
Hey, how about this? Are you ready for this? You know why Waldo wears stripes?
No. Why does Waldo wear stripes?
Because he doesn't want to be spotted.
Ooh.
Oh, dang.
We just lost. We don't have any viewers anymore.
Oh, man, that's funny. Well, what are we going to talk about today?
You know what's funny? And one of the best things about Gimbal is we have all ages working here. We have all ages, and we have new economy, we have old economy, and one of the benefits of all ages is we all get to help each other here. And so Caleb Tyner was in earlier helping us with our sound quality, and then I got to witness Keith helping Amanda with locks. And so that's one of my favorite things about Gimbal Financial.
We're just really good at helping people in their weaknesses and in their strengths.
Absolutely. So. Absolutely.
Well, should we dive right in?
Yeah, why don't you lead the way with our COVID update?
I can do that. The young leading the not so young. Now you started it. No, I'm kidding.
That's fair. That's fair.
Wow.
No, I'm messing. But yeah, so on this week's COVID tracker, we get these on Thursday nights, and I really enjoy these. And when I first open my email on Thursday nights, I take a look at this graph right here. And like we've shown over the last couple of weeks, that line is steadily decreasing. Looks like the deaths have also taken a small little dip, or it's looking to head in that direction as well. So like we've been saying, just with the amount of vaccines that are being available to people, and just the immunity that people are already facing by having the antibodies, we've got this path to immunity. It's still going up. That's a positive. Do you guys have other things on this before I touch down to the bottom? Because there's a pretty interesting graph down at the bottom.
No, I'm excited that the cases are dropping pretty much like we talked about, in the shape of a bell curve. And I have a feeling that that's what you're going to see on that orange line here. When we come back in about 3 weeks, you'll see it dropping off like the bell curve too.
In
Yeah.
regard to this, Keith and I, we were having lunch yesterday and we were talking about habits that have changed and just wondering when things would get back to normal. It's hard to know, but we almost have 12 months of habits changing right now and expectations changing. And so that'd be something I'd be curious for feedback on, is just, you know, when do you think that you might go to a store without a mask and that be accepted? Do you think that'll be accepted again? I'd be interested in everybody's feedback and thoughts on that.
This graph here at the bottom, I'm not trying to downplay COVID or anything. It's a very serious thing. A lot of loved ones have been lost. But if we look at this chart down here at the bottom, the COVID-19 pandemic in context, we're over here, 2020. That blue line is the US monthly deaths per 1 million people. That looks like to me that we have a pretty similar amount of deaths that we had back in the 2018 flu. We've known more about the flu, I think, just what it can do. And so maybe that's just the unpredictability and unknown about what we've experienced with COVID. But we're pretty much in the same deaths per million as we've seen back in the 1950s and other pandemics that we faced. But I know in 2018 I was alive and I did not stay inside for almost an entire year. We didn't shut down to the extent that we have with this. So you guys got any other input on that?
I think it also highlights just the, you know, advances in technology. And, you know, we have soap. Everybody uses soap today, or most people use soap, or just the advances in medical facilities, the cleanliness of things, the attention towards cleanliness. And yet we still have, you know, pretty high effective rates or death rates, even looking back. And so it's been a wild time. It's been a serious time. I think at the end of the day, it boils down to doing the best you can. And then also, you know, just trying to learn as much as you can about the advances in medical technologies. And, you know, many people are very excited to take the vaccine. Few are not so excited about that, but you have the opportunities to learn and you have the opportunities to be free. And that's, to me, what keeps me going is we're just learning, but yet we still have freedom. And my hope is that both of those keep advancing.
I would say the other comments I would make about that, Amanda, is if you scroll back down to that graph, I'm guessing that you didn't even know there was a flu problem in 2018.
Right.
And so we're at the same death level as we were in 2018. And then if you go to the left on that chart and just kind of see where that 1,000 deaths per million crosses through the middle there of the regular thing, it's out into the 1950s before we even got, as a culture, below 1,000 deaths per million as a regular expectation. And so the fact that there's blips and things around the way, I think it causes all to kind of be realistic with ourselves, objective about our own mortality. And the less objective I think I am about my own mortality, the more anxious and the more fearful I live, the more honest I am about I have a life expectancy, maybe 70, 80 years, then the more I'm going to live today, the more I'm going to live without fear today, and the more I'm going to be honest with myself when I look myself in the mirror. That's my thoughts on the whole thing, because my grandfather was born in 1900, and it was averaging probably twice where we are right now when he was born. And who knows what infant mortality was back then. So the fact that he even survived birth was an amazing miracle. But he had no idea how bad it was relative to 2021 when he just lived. And that's what my encouragement would be to everybody, is to be honest with yourself and enjoy life and live the best that you can. Because the data just shows that this thing's probably on the way out, in my opinion. And so there's a reason to relax and enjoy life.
And we talk numbers here in finances, but we know that your most important investment are your family members, and several of you haven't been able to hang out with your family members, and that's where we'd like to encourage you too, is to make those investments in them. And you might have to get creative about it right now, but just to, you know, plan ahead to see your families, to touch base with your families, and to not let this slow you down. Because facing your own mortality, that's an interesting thing, but thinking about what do I want to do with the years I have left, that's where life is. And so pouring into your family is a good thing.
And I think along with that, Doug, I think one of the things we don't talk about with our clients a lot is that we are very focused on the quantitative aspects of financial planning and things, but our heart and our desire for our clients is the quality of life things. Not like, I suppose that you all expect us to understand the quantitative, and our roles are to help you understand how to make the most out of your quality of life from the resources you have. And so that's why we don't spend a lot of time talking about the quantitative, but we talk about living and life and what these resources are really for.
Shall we dive into the markets?
Why not? What do you want to look at?
We spent enough time
talking about COVID. I always am, but
let's get into the markets.
How about,
I've got a few I'd like to look at. You lead the way though.
We hit 14,000 on the Nasdaq, and we went from 12,000 when it first hit here in September to 14,000 here in February. How do you say that word? Do you guys have an opinion?
Second month of the year.
February.
You don't pronounce the R?
Nope.
I feel bad. When I say February, I feel bad because like you don't say it. So I don't know. These are things I have to.
Okay, we can be different and still get along.
So anyway, we've had a pretty significant run. This September timeframe was painful. That was a correction. It was more than a 10% drop, and it happened very quickly. And then we hit this October where it bounced back up to 12,000, another big smack in the face. And then we had a run here for the last probably 75 days or so, but we're bumping off that 14,000. Jesse Livermore, y'all know that name?
Yeah.
How about you, Doug? What do you know about Jesse Livermore?
Well, Jesse Livermore, he might be one of my stock market heroes. Now, he had his faults too, but he was a pioneer. He was a pioneer in viewing the market the way that Gimbal Financial views it, supply and demand. And so just looking at the volume of shares traded, the price too, but looking to see who are the buyers and who are the sellers. And that's really as complex as the market needs to be.
Yeah, and one of Livermore's points of views is time to be cautious or time to be aggressive is right when you get near round numbers, which is really weird that that's a psychological thing, but we're right at that 14,000 number. And just like we were at the 12,000 number here, there was just a battle between buyers and sellers. And so it'll be a curious thing to see what happens with that 14,000. What were you wanting to look at, Doug?
Well, a couple comments. We like Jesse Livermore. One of the Jesse Livermores of today is a guy named Mark, and we've really enjoyed getting to know Mark. He hasn't really gotten to know us, but we feel like we've gotten to know him. And this, I want to read something that Mark said the other day. He said, "I feel like we are scraping the bottom of the barrel here with regard to new buy ideas." And one of the reasons that Mark feels this way, and we sense the same, is the averages are so far north of their major moving averages. The price today is so far north of the major moving averages, and it could go higher, absolutely. But those buy ideas become more and more difficult the further we get away from the red line and that black line. And so as we look and we hear topics like on I think it's on Yahoo Finance today, said the stock market is a fascinating place to be. And when I hear stuff like that, I start biting my nails again, because the retail investor today is more influential than he or she has been in a long time. I saw a quote where up to 25% of shares traded today are from the retail investor instead of the institutions out there. And so that tells me that, folks are taking advantage of learning. There's new tools out there. There's ways to buy options. There's ways to do things that maybe a person wouldn't have done before. But to have the wisdom and discernment to know what to do with those tools is a completely different thing. And so as this place becomes fascinating, I just want to encourage you to stay focused.
I think that has affected us too. We could have probably been pushing the gas more in the accounts we have for clients, but we've been very cautious, and that may cost us a little bit short term, but we're trying to take a long-term approach at managing the risk in portfolios and having you all situated in what we think is a reasonable way. I saw Minervini also had a quote last night that I was reading. He said, "My 12-year-old nephew and my niece suddenly want to trade stocks and open a Robinhood account. My good friend who barely traded a stock in his life is up 189%. And friends I haven't heard from in 10 years out of the blue are calling me about trading." And then his question was, is this market a little frothy? And froth is that stuff on the top of your fancy Starbucks drinks. It's not the substance, it's the fluffy stuff on top. And so, I'd say we are cautious right now, and we could be wrong for an extended period of time, but I would rather be cautious than too aggressive at a time when you should be cautious.
And normally where everybody else is looking is probably the place that you don't want to be looking. So news headlines a couple weeks ago were about short selling and the advantages of taking advantage of the short sellers. We've also seen cryptocurrency conversations, and I think this week it was weed stocks was back in the times.
Back in the olden days, Doug, when we could talk about individual securities, we talked about an ETF. We didn't endorse that ETF because we don't give specific recommendations. We just talk generalities, even if
we get to hang out with you one-on-one.
Yeah, if we do get the green light one day to be free to speak again. One of them we mentioned a few weeks ago that I mentioned was moving, was related to the pot stocks. And just to give you all an idea, that particular one we mentioned, I think doubled this week. Wow. If it didn't double, it was up 60 or 70%, an exchange traded fund. And when mutual funds are moving at that velocity, it also tells me that there's a lot of speculation out there. So there's a lot out there that causes us a little concern. I don't think it's concern that we're going to necessarily drop 40% or whatever we did back in a year ago, but I think it's definitely not a time that people should be aggressively pushing on the gasoline. Portfolios.
And there's natural endings to things in the stock market, and normally that comes with satisfaction of a price. And so if there's an investor who's satisfied with the profits that she's made off whatever position, that is the stock's natural ending, and it starts moving the other direction. And so we're going to see that from time to time. It might not be those big drops like we saw in 2008, but it could be some real up and down times. I think one of the most challenging stock markets for me personally was 2011. And in 2011, the market was just swinging back and forth. And so, it would have you in, it would have you out, and it's really hard to make progress. But at the same time, and normally when markets start to retreat and go down, it just starts with one day. And so you have to have your sell strategy. You have to know what you're going to do ahead of the trade that you make.
And that's the approach that we're taking on it. And I was talking with Caleb a couple of nights or 3 or 4 nights ago, and I was pointing out to him the stock that was newsworthy a few weeks ago. It traded as high as $483 having maybe just a few days earlier been trading at 35. In just a few days, it ran up to 483. And all of that kind of psychology, it pulls in investors, and Livermore talked a lot about that in his writings, but it pulls in people, and unsuspecting people get pulled into those things. But at $483, when the transaction took place at 483, there was a buyer and a seller at 483. So there's one person somewhere out there in the world that sold at 483.
Yeah.
And they're bragging about it to all their friends.
They're going to be the guy on, on the stock shows that we all watch. How did he do it? Here's this person's next call, and everybody's going to want to participate in that.
Yeah, and it might have only been 100 shares. It might not even been 100 shares that traded at 483. But what I was pointing out to Caleb, on the other side of that trade was it had to be a new investor that paid that 483. I don't think seasoned investors would have bought that. They might have, but it was some gullible person that paid that 483, and they've lost 90% of their money in just probably less than 10 trading days. And so this kind of market is one that could scorch or kind of damage some young investors, maybe for the rest of their life on investing. And so I think that's why we've been very cautious at trying to warn people against those things, because we think you can do really well in the market over the long haul and to do it in a reasonable manner. But if you get burned by trading habits that are much similar to going to Las Vegas, it may taint you against being a long-term investor. And we want to encourage people with their long-term investing strategies.
Yeah, and that's not to mention that we love new ideas. We love disruption, positive disruption in the marketplace. New tools that are out there are just amazing. But nothing really has changed. The tools have, but it's just supply and demand. And that's what the market will always be, is supply and demand.
Yeah. I wanted to just take a quick minute and talk about sequence of withdrawals of your money. That's more of a planning strategy, but if you have multiple buckets of money, say you have a taxable bucket of money, a tax deferred bucket, and a tax-free bucket, they're all going to impact your financial situation differently. And the sequence that you take money away from those will affect a lot of variables that I think that's where we can add value to our clients as they're trying to figure out how to get money, when to take money, and where to do it. And so give us a call if you're thinking of just taking distributions from money, or if you've got monies in other places that maybe we're not aware of. Give us a call on those things so we can help you with some of your cash flow planning. And then the reason you need to call us too is to talk to us about the super retirement account that many of you aren't taking advantage of. And this retirement account is primarily for people under age 65. So
do we even offer that one?
We don't even offer it, but we want you to be educated on it because it's worth your understanding. And those are places where you may have resources that we may not be aware of. And so those two things I think are critical for you listeners to think about, and give us a call in the next couple of weeks if you've got questions on it. Probably will be an article discussing these in a not too distant anchor as well.
Yeah, some of the feedback I get around tax time, especially for you who are still working, is where do I defer my money? Do I put it in traditional? Do I put it in Roth? And there are advantages, there are disadvantages. And the one thing that I've been doing that I like to do is I just like to have things spread out, because I don't know what the future is going to look like. For years, the future, come on, that was a dumb statement. The future of tax brackets, just because your president's in or your president's not in, likely it isn't going to have that big of effect on you, because I've got 20 years from now. Who knows who's going to be in office? Who knows what they're going to do to my tax brackets then? But if I can have my eggs spread out a little bit, not even just spread out and diversified investment wise, but for tax purposes too, I think that is just a wise idea. Because when I go to buy a new car someday, wouldn't it be nice to think, okay, how will I take this from what account is it best to take this money from? So keeping your options open makes a lot of sense. And there's more tools to do it today than there were 10, 12 years ago.
Yeah, and I think that's where we can be a great resource for you to talk you through some of those ideas that you haven't maybe even considered the benefit of those. So don't be afraid to call us, or even more enjoyable to the longevity of Gimbal is don't be afraid to send friends our way too, because we are still accepting a few new clients, and we'd love to help your friends maneuver through their financial situation.
I think the most fun I've had as far as new clients go is just generational clients. Like, I can't believe the family relationships that have passed through here, and had an opportunity to walk through one of those on Monday this week. And that's a pretty amazing thing. So thank you all families out there for that.
Yeah, I had that benefit this week too, to talk to some generational situations, and it's just an honor for us to sit down with loved ones and help them. And sometimes we do it proactively, and sometimes reactively. In whatever case, that when we're sitting down with your family members, it stirs our souls. I think the fact that we kind of know the history of how these resources got there, and the desire of those resources, and then helping maybe with some younger people create some new ideas for the future of their resources. That's just a lot of fun. It takes our creative side away from those quantitative things we talked about earlier. We can't hear you.
Because I'm muted. I was trying to distract from all the construction going on above me. But last year, the beneficiary IRAs changed their rule a little bit too. So if you want to get educated on that, or just know something more about that, give us a call. I have another thing on taxes, like Doug mentioned last week. If you don't have your 1099 for any account yet, give us a call. Our back office LPL is working diligently to get them out, but as soon as it becomes available, you can see it on your account view. So I'm happy to help you set up your account view so you can access that as soon as it's available. And then 3, tax day is our food truck fun day. So I'm going to send out that invitation via email today. We hope to see you on April 15th. We're going to have a food truck parked in our driveway. And first come, first serve. Whoever can come, we'd love to see you.
That sounds awesome. I'd say I want to throw out one more sales pitch today, that if you have any what are called non-spousal beneficiaries on any of your retirement account, we've got I think unique strategies to help you and future generations that I haven't heard anywhere else. And so call us about those so we can educate not only you, but your family members. And a non-spousal just means I'm not leaving my account to Connie, I'm leaving it to Caleb. Caleb would be a non-spousal beneficiary, but and maybe this is a catalyst for those accounts that you have somewhere else, that you review those beneficiaries as well.
Totally. Anything else before we wrap up? We got a long weekend ahead, so just letting everyone know, President's Day, we are observing. Celebrating. So we'll be back next week.
And if you call us on President's Day, you'll get to know our voicemail very well.
Sounds good. Thank you, guys.
See y'all.
See you next week.